Midday update for the U.S. stock market, 1:18 p.m. Eastern Time, December 1st. I was doing some work on AI course, a little different slant than what I'm aware of, and looked up at the quote screen, and oh my gosh, this market is doing a breakout. And I checked with the model, and the model's saying, yep, it's a very good breakout. So the stock market's moving higher, challenging the high of the year. And interest rates helped out with that. The market was sensitive enough to interest rates. I was looking for the market to stay sideways a little bit this morning, hopefully even higher. Well, it didn't really go higher, didn't take out yesterday's high or the overnight high, but it held in there just enough, and then they dropped it. And so we have a level 4 top in place. And now the interest rates have taken out the low in recent days, new low of the week, and the bonds have moved up to a new high for the week, and we still have downside targets, new targets actually for the interest rates, down to about the 4.19 area to about 4.14, and I warned you that if it goes below 4.3, that was constructive to bring it down. We have a little more upside targets left over in the bonds as well. What this is telling me is the bond market has a level 4 downtrend, and maybe it'll rebound Monday. But the point is, this is the next leg lower in interest rates and higher in bond prices of the larger level 3 trend, the more important trend during a month. And so my guess is, even if they want to put rates up on Monday, they're probably going to put them back down again. That I think we ought to see higher bond prices and lower interest rates for some of next week. And we've got a variety of scenarios now that's telling us these investors are looking at a variety of things to go on in the next couple of weeks. In other words, we may even see lower interest rates for a while. Now, another fascinating is Chairman Powell of the Federal Reserve come out and stated that people could be making too big of a deal over the idea that the Fed won't raise rates. And he was basically just saying they haven't said anything like that. They can raise rates. Well, that's a bit conflicting of what they've been discussing. Of course, they always do that. They don't ever give us a straight answer on anything, it seems like. And I find it fascinating that the bond market just said, we don't care what you say. We're putting interest rates down. We're putting bonds up. I'm also fascinated the stock market jumped on that and said, we don't care what you say. We're going higher, okay? So the stock market wanted to go higher anyways without the interest rates, apparently. And now the interest rates, they're back saying, well, that's another reason to buy here. So the stock market has taken out some of the highs here and looking quite well, quite strong. And I was telling you the volatility over the last 5-7 days seemed kind of quiet. And the market was just hesitating, and people were trying to decide over the last 5-7 days what to do. And somebody was going to blink eventually, and volatility would pick up. Well, the volatility has picked up and to the upside, and we have a breakout. And so there's definitely people making measurements and trying to figure out what occurred over the last 5-7 days. What does that mean for upside potential now that we have what appears to be a bullish breakout? Now, on an intraday basis, they might back this off before the close here, saying, hey, we're wrapping out the week. Maybe we got a little carried away. So there may be some intraday setbacks here. But I'm thinking there's a chance the stock market can be higher at least into Tuesday, or even if it's down Monday, it will be higher by Tuesday. To me, Tuesday's the earliest for level 3 top, and there may even be a chance this level 3 won't even top out next week. It'll be the following week, which means the jobs report may not matter to the downside. It may not cause much of anything, and maybe investors are going to like it and actually buy more. So we have put the market up to the high of the year. What do we have for upside? Well, I've adjusted the upside objective for the futures to 46.30s to 46.50s. And the cash would be about 7 points lower, I think. And so maybe at least 46.10s. That's a little bit higher than what I was talking. I think I was talking 46.10s, and now we're looking at 46.20s. Maybe I'm getting carried away and being a little too bullish as well. But today's breakout looks really good. Now, I got a feeling that some are going to be nervous still. Where do they buy? I think they're saying buy it, ask questions later, worry about the risk later. But I don't see like right the moment I got the cash market at 45.94, and the higher today was almost 4,600, and it is starting to back off a little bit. But there's really nothing here to signal that there's something wrong with this bounce, that maybe they got carried away, till it trades below the low of today at 45.54.71. And I think quite a few people are going to say they're not going to let go until it takes out yesterday's low at 45.37.24. So something can still go wrong with all this data and the Fed Reserve next couple of weeks, but I'm a little suspicious this market just wants to keep marching higher this month. And I really think it ought to pop nicely through that 4,600. Somebody might want to sell it there, bring it back, but my guess is he'll make another push. And I think it's going to be higher than this by the end of this month. It might be quite a bit higher. Very interesting setup, nice breakout. And I think it's too late to suddenly just top right here and down for an entire week. I think the market is telling us it doesn't have any intentions right now of going down a sizable amount, and I really am starting to question whether that jobs report can make any kind of meaningful negative impact on the market. I think people are just saying, hey, these stocks are worth quite a bit more than this right now. We just got to get on board with the idea it can be bullish next year, and somehow we'll still have to deal with the Fed and some of these other things that are going on. Past results are not necessarily indicative of future results. Have a great day. Thank you.